Everybody, it's Omar. It's March 11, 11:56 a.m. and I just wanted to make a video about my watch list for tomorrow. I didn't get to trade Friday. Didn't even get really a chance to look at anything Friday. I don't know if I'm going to be able to trade tomorrow. Looking over to see, any potential stocks that I love for tomorrow. I don't really love anything in terms of from a day trading perspective. Not too much that I found that I thought was great. Markets gapping up, but it's choppy. It's not like the price action is not like what it was last year. We have a couple of days like ZSAN and a couple of other stocks. Matter of fact, I didn't even look at it to see if it should be on the watch list. But nothing crazy. And I told everybody when I made the watch list Thursday for Friday that I thought ZSAM was due for the red day, and it did. It had a monster red day. And I had set some support and resistance levels for potential trades on it, and these were the support and resistance levels I had set for Friday. Sorry, my computer is freezing a little bit. Let me open up here. Yeah, this is what we had looked at and set our levels. So when the market opened Friday, we had some. Look at this. It gapped up, pulled back, found support here. You could have took it along here, right off that support line. And once it topped out here, you can see that we had a support level that I mapped out at that 24.82 mark on Thursday. Look at that. Got up there, never broke above it. You could have took a short, risking right off that 24.82 or even 25.70, even 100 shares, and just held all day. Would have got you a significant amount. And tomorrow, Monday may be the beginning of the end. Now, I didn't put this on the watch list. You know what? And I should. ZSAN. So we'll put that on the watch list for tomorrow too, just to keep an eye on that. Now, all these other stocks, I actually built my support and resistance levels. So let's start with CRS. CRS was also on my watch list for Friday. I didn't trade it, but this was Friday's move, and we had support and resistance levels set at 75 and 77 cents. And you notice it was like consolidating this upward trend, and once it broke 77, came back, retested, and held it, and you could have just rolled this up. But the problem is that from a day trading perspective, these stocks are like choppy and grindy, and it's kind of sometimes hard. But as long as you're working off those key support and resistance levels, you're good. You can take them for a swing or a quick day trade. Just really depends. So what I'm looking at, it's on my watch list for Monday, and what I'm looking to see for it to do on Monday is, right now it held a high of 85 cents. If we look at the yearly chart, the 1 year chart, it's had these 2 green days. There is volume. It lost half its volume, but it's still grinding upward. So that's that could be a sign that it may be ready to give it back. And if you look over the year, like when it's had multiple green days, they're slow grinders. They're not like huge movers, So, it's had multiple green days in the past, but, this is a shitty company that's been beaten down to nothing from $3 down. It's had a couple of runs where, like, for example, back last year, it went from 160, this was what? June 16th, it went from 171, and 6 days later, it was up at 225. So, you can watch it for a potential swing trade. If I, leveraging my, simple moving average strategy that I've been kind of working with, like using the simple 300, the 300 SMA as like a support level. It's riding it. It's still riding it up. Let me do 5 day. Yeah, it's 5 day, 1 minute. And if you look at over the last 5 days, it's been riding that simple 300 moving average. Kind of on this day it pulled back below it, but then it kind of found its support here, consolidated, and now it's back above it on the 1 minute. And it's been riding it the last couple of days. So we'll see what happens Monday. But what I'm looking to do is to see is that if it breaks above 85 and holds support, I'm gonna take it long, risking off 85 or even 80 cents. If it pulls back at the open, look for a potential dip buy at 80 or 79 cents. If it can't hold, because there's a lot of support here and a lot of volume support. If it can't hold, I think 79, I think this thing pulls back pretty hard because there's a lot of volume here. And it's a big key support level. If it holds 79, then I think, you know, it'll continue on upward. I don't know, you know, I don't look at the news or anything. I'm just playing the technicals. You know, you got a couple of other key support levels here of 77 and 75 cents. But for me, you know, I mean, if you could find the shares to short, obviously if this is pulling back, you can risk off the 85 cents. Or if it breaks below 80 cents and 79, you can risk off any one of those key levels. You know, the problem is these sub-dollar stocks, they're hard to find shares to short. You need like a Centerpoint or Interactive Brokers, and sometimes they have the shares, sometimes they don't. So, you know, that's what I'm looking at for a continuation to the upside. But because it's only had 2 green days, it can have a third one. We'll see what happens Monday. Next up, NIHD. NIHD, you know, is up 20%. You know, nice move from 140 to 188. You know, but again, like, you know, this is like grindy action, you know, nothing sexy. But, you know, we have some key support and resistance levels mapped out. Now, this thing has been in an upward tear since February. Now, February 23rd, this was at 59 cents, and now it's at 188, man. So people were doing really well. And this has been on my watch list several times. Now, I didn't expect this to go from, you know, at 59 cents to $100.88. I wish I would have took a huge position and held, but you know, it still continues to run. You know, I haven't looked at the news, so I don't know what's causing this thing to move, and if it's still gonna move. It's only had 2 red days, but not even like, well, this red day was pretty big, but it has a big green day. 7 million shares traded, and the volume keeps increasing. That means there's more buyers in here. The fact that the volume is increasing is telling me that there's people buying this stock thinking it's going to continue to go up. Now, is it? I have no clue. But we trade the chart. So what we're going to do is we're going to look to see if the stock holds 188 and breaks above it, I'll take it long. If it can't hold 188 and, you know, breaks down, I'll short it, risking 188. The next key support level here is 173. If it holds 173, I'll take it long. Otherwise, I'll take a short, risking off that 173 or even the 168 level. So looking for those key levels for potential dip buys. Otherwise, you can short, risking off those levels. The next key support level here is that 156 level. If it holds 156, you could buy the dip. Otherwise, you could take a short, risking off that. Now, if it breaks 156, always be careful of the whole numbers, you know, 150 area. And, you know, this thing can get back to that 130 area. So, you know, we'll see what happens. But, you know, it got some volume here. So we'll see. You know, but like, again, I'm not in love with any of these stocks on my watch list right now. Next up is PIXY. It's been running for the last several days. It went from 250 to 635. Beautiful move. If we look at the yearly chart, the stock has been as high as 1164. You know, it's gapped down, and now it's, you know, on this upward trend. Now, the thing that, you know, is interesting is that this stock has a gap to fill down here at this 265 level. So, you know, with that said, doesn't always happen, but because it does have a gap to fill below, you got to expect that it's probably going to fill that gap and it's going to tank. And if you look at the chart at the end of the day, you know, it still finished green, but the bears really took control at the close. Now, these are short sellers, probably didn't cover, so you got to expect it either they're going to hold or they're going to take their profit, and it's going to cause an artificial spike at the open or even pre-market. We'll see. So I got my key support and resistance levels mapped out. Now, I don't know what's going to happen. I don't know if this is going to continue to run. Maybe, you know, just completely tanks. But that's why you got to have that's why you build a watch list and you have your support and resistance levels mapped out so you know where you could potentially take entries. So right now, you know, it bounced off that key level 455, you know, gapped up post-market, and it held 460. You know, more than likely, my guess is you're going to see an artificial spike pre-market, and then maybe if this stock is done, you could take a short, risking off one of these key support levels at the market open if it can't like break above any one of these key levels. So what I'm looking to see is if it breaks above 496, really, and I would really like to see is break above $5. If it can hold $5, you could take it long, looking to test that 527 level. If it breaks above 527, you can take it long. and then the next key level 571, 612, and the higher day of 635. Now, if it because there's a lot of overhead resistance now, if it can't hold any one of these levels and break above and hold it, and you take shorts risking off these other key support levels. That's all stock trading is, guys. And you can apply this to small cap traders or large caps. It's the same principle. The way my strategy, that's kind of like, you can apply this to any type of stock trading. It doesn't matter what stocks, whether you're trading Netflix or you're trading some dog shit company like CRS that's 83 cents. It's the same principle. What happens is, what you see a lot of the big when you see some of these guys like Tim Grittani and all these other guys, like sometimes they'll hold their positions over a few days because they think the stock is sort of done and they get the big wins. What they don't tell you, like Steven Dux and all these guys, like what they focus on is small market cap companies to either go long or short. The problem is when you want to short these companies, you need a brokerage that can have the shares to short. And a lot of times you got to borrow those shares before the market even opens because they're not going to be available. That's the one thing these guys are not telling you, and not everybody is comfortable with doing that, So that's something to just think about, in adopting these kind of strategies for all these low flow penny stocks. If you map out your key support and resistance levels, guys, you build your watch list. And again, what I do is I look for stocks, generally, top percentage gainers or stocks that are holding their highs. I have several videos on how I build my watch list, but I look for more or less stocks that generally hold their highs. Now, this stock had this big wash, but I know that because this stock had such a move, that my expectation is going to continue to be volatile. So I'll play a position based off one of these key levels. And I use this chart here just to show you in the video because it's easy to follow on the eye. But when I'm really trading, I'm kind of toggling between that and this chart, especially when I buy dips, because here I have the 1 minute time frame, here I have the 5 minute time frame, here I have the 15 minute time frame, and here I have the daily, and it allows me to really look at a stock to get a sense of what it's really going to do. Sometimes you need a longer time frame to get a better sense of the direction of the stock, especially for stocks that are like kind of choppy and grindy, they don't have a ton of volume. But you always want to try to trade the stocks with a lot of volume. All right, so with that said, next up, TNTR. TNTR was up 27%. So this stock, went from 470 to 668. Nice move. So I got these key support and resistance levels mapped out on this stock. All right, so this stock it's holding its highs. That's why I like putting stocks like this on my watch list, because they're holding their highs, they have volume, and the expectation is that they're going to be volatile. So what I'm looking to see is if it can break above 668 and hold, I'll take it long, risking that. Can't hold it, I'll short, risking off that high. Okay. Now if it pulls back, I'm looking. Now in theory, you do have some overhead support here, and you could put trend lines in each one of these areas. But for me, I'm looking to see where it does at that 610 level. If it holds 610 or even $6, 5.99, $6, because you can see you have some clear support here, I may buy the dip. Otherwise, I take a short, risking off that level. Okay, the next key support level here is 575. It holds 575. I buy the dip. Otherwise, like a short, risking off that level. And then 550 is the next area I potentially could dip by. Otherwise, if it doesn't hold, I could take a short, risking off that. And then you got to see where there's support down below. I don't know what's going to happen tomorrow, but those are the key levels that I'm looking at to potentially take a trade. This is we'll see what happens. Next up is ECYT. So ECYT, this is on my watch list for Friday too, man. You guys could have banked shorting this if if you were following my video on Friday and you had the shares to short, man, because this gave you an easy opportunity to short the market on Friday. We had this pre-market set here, right, at 980, and then it kind of like started giving it back, falling back, and I said buy the dip if it held 897 and not take it short. And look at this, right at the market open, I mean, you had this weakness already showing, and boom, And right when it gapped up here, it got to a high of 888.9, but it didn't even touch it. You could have took a short right into this candle, risking off this, all right, and just took it down, you know. Or if you want to be safe, you know, you could have just even 100 shares, just until you get comfortable, risking off the high day. So you know, if you got in 100 shares here, hey, you're only risking $100, but you're risking 100 to make, you know, a couple of hundred, you know. So your risk reward is nice, you know. And you know, this thing just completely tanked. I told everybody in the video Thursday, go watch the video. I said Thursday that my expectation was that Friday this was gonna pull back hard because it's just been on this run, and you gotta expect people to take profit. That's it, guys. You don't have to overthink this stuff, you know. You don't have to overthink this. It's human nature. I know, like, a lot of the traders, they use spreadsheets to calculate the data, which I think it's fantastic to do that. But if you're just thinking like a normal, just like a normal person would think, you would think, well, man, this shit is running. I don't know how hard this is gonna go. I gotta, you know, some point people are gonna want to take their money. You know, that's what happened here. People, short sellers came in and people started taking their money. You know, and it found support here at 746. So, you know, and now it's kind of gapping up. This could be, you know, dip buyers coming in to buy the dip, as well as short sellers covering once it found its support, you know. So what we want to see come tomorrow is, you know, right now, you know, it got up after hours. It's holding that 823 mark. We want to see. So if it could hold 823, you could buy the dip, take it long, risking off that. Otherwise, you could short, risking off that. Maybe because we may get a day 2, you know, sell off. We'll see. But what I want to see it break above next key level for me is, I want to see if I'm going to buy it, I want to see it hold 856. Otherwise, can't hold it, I'm going to short, risking off that 856. And then if it could hold 897, I would take it long. Otherwise, I'd risk off that 897 level. And then the next, you know, you have support here, and you can put these areas here. Like, you could potentially look to buy, go long above 923. Otherwise, take a short, risking off that, and then 980. So those are the key levels that I'm looking at. I'm interested to see though if it doesn't hold this 746 level. Here, let me pull up bigger time frame, like 10 days. I'm curious to see if it doesn't hold this 746 level, to see. I mean, you have a lot of support here in the $7 level, but you know, I wouldn't be surprised if we had a day 2 red day if this thing got back all the way down to $6, just because so many people bought here, and they would be panicked. Like, if you got another red day, they're like, shit, let me take my profits. I'm not holding this anymore. I'm up whatever amount I'm up. I'm just gonna just cash out. So that's how you got to think about this stuff, guys. All right, but we'll see. Okay, and you know, this was on my watch list back at $6. Now, I had no clue this shit was gonna go up to $8. I would have held, you know, but you know, that's just the way it goes, right? All right, next up, where CHRS was up 30%. So you know, we'll see what happens. You know, as you can see, like, if like this head and shoulders came and, you know, it's kind of gapped down. Now, what I would love to see, like, I love this chart because you know, it's up, had a big green day, right? And if you look at the chart history, let's see, big green days are usually followed by, well, this has a history where it runs for multiple green days. But I'm trying to look for a big, yeah, here it had a big green day, and then it had another big green day. But it opened at 11.55, had a high 12.55, low of 11.35, closed at 11.95. So this is a volatile stock. So, you know, this is a stock that, you know, you can really play off support and resistance levels. Now, what I would love to see is it going to hold 10.85? Because if it doesn't hold 10.85, then this has a gap to fill all the way down 9.25. So this could be a great short. Now, if it holds 10.85, you can take it long. You know, if it breaks above 11.75, you can take it long, risking off that. Otherwise, short it. Next key level here is 12.20. If it breaks above 12.20, it holds, take it long. Otherwise, take it short, risking off 12.20 or the high of day at 13.35. All right, if it breaks 13.35, it holds, go long. Otherwise, short it. Now, I don't know what's going to happen, but we'll see. Next up is ZSAN. I did not map out my support and resistance levels. Now, these are all support and resistance levels from, you know, over the last couple of days. So I gotta create my alerts, but I'll let you figure that out. That could be your little homework exercise. You know, just pull up the chart, pull up the the 1 day, and you could just go through this. And sometimes if you don't get a clear, defined look, you can just use like a 5-minute chart, or a 15-minute chart to just map out your key support and resistance levels. You know, right now it's holding 1765. this, you know, it's been on this crazy tear, had its first red day, maybe has a second one. So, you know, you want to definitely map out those key support resistance levels below so that you could potentially buy a dip, because it's going to be very hard to short this stock because it's a low float stock. It means not a lot of shares are going to be available to short. So, you know, map them out and, you know, put your alerts. Okay, next up is ETSY. ETSY, I've traded this several times. This thing just does not want to die. Does have a gap to fill below, but doesn't seem like it want to fill any gap below. It's just been running. But I think when people start taking profit, this thing is going to really pull back hard. Now, I don't know if that's going to be tomorrow. But, you know, I put this on my watch list because it's holding its highs, up 5%. You know, it's not a lot going on, you know, on the watch list. So I'm like, all right, just let's put it on and see what happens. So if it breaks above 28.10 and holds, I'll take it long. Otherwise, I want to short it, risking off that 28.10. A potential dip buy for me here would be at 27.30. If it held 27.30, buy the dip. Otherwise, short it, risking off that. Next key level below is 26.75. You could buy the dip there. Otherwise, short it, risking off that. And if it breaks below that, I mean, there's no reason why this thing can't get back to like about $25, $24, you know. So, you know, you do have some clear support here, 26.34 and 26.43. So we'll see. And last two stocks, AHL. This is on my watch list because it just had this crazy spike at the end of the day, and, you know, got up to 42.60, kind of pulled back and consolidated here. So what I'm looking to see is if it can, you know, what I would love to see happen is it not hold that 40.70 level. And if it didn't, I'd short it, risking off that, man. You get a few points. But if it holds 41.20, you can buy the dip, risking off 41.20 or 40.70. Next break above is 41.65. It breaks above 41.65, take it long, otherwise short it, risking off that level. Or 42.60. If it breaks 42.60 and holds, take it long, otherwise short, risking off those key levels. Now, what I love about the alerts, guys, is that sometimes, you know, maybe this stock runs sideways, doesn't touch any one of these areas, but at some point they will, and I'll get the alert and I'll be ready because, you know, I always put my little notes, you know, so that way I don't even have to remind myself. Always put your notes, like, so that you know what you should, you know, you're looking to do. You know, this is not normal value for a stock like this. It's 2.3 million shares. Its average is 897,000 shares traded. So my expectation that hopefully it's gonna give it back and it'll be a great short. And my assumption is that this stock is probably gonna be easy to borrow. It's higher price, but who cares? $100 get you like $300-400, you know, because it goes in points. And then last but not least, big. Sometimes what I'll do is, like, I also look to see stocks that had big red days. So this stock is down 10%. And what I'm looking to see is, well, you know, it found its support here at 46.55. And just to show you how support and resistance is such a big deal. So here's the 148. This is the 180-day chart because I had to go back further to find support. And look, this stock bounced at 46.55. And if you look around here, 46, this stock here, like 46.66. So it found its support like very close to, if you notice here, look right in here, notice right here, this is where it found its support. This day here, it will hit a low of 46.66. So, you know, found its support. So sometimes you gotta look real, when a stock is like tanking, you gotta look further back in chart history, see, okay, where is there some support? Because then you can potentially buy a dip once you figure that out. Because remember, it is literally digital dots on the screen. Nobody knows what a stock is gonna do. So you gotta get a sense of, you know, where you could buy a bounce when a stock is tanking. Now, it does have a gap to fill above. Now, maybe it doesn't. So what I'm looking to see tomorrow, I didn't put I should have put an alert here. I'm gonna put it here in a second. But what I'm looking to see is that, you know, it's kind of gaining some steam. If it could get above 49, you could take it long, risking off that 49. And, you know, the next key support level is 50.56. If it can break that, this thing gets back to 53. Now, I don't think that's going to happen, but, you know, who knows? Maybe it will. So, just to show you, if you've never seen this before, it's the first time you're watching this video, this is what I'm going to do. I'm going to put 46.55. So, I'm going to put 46.55 here. All right, so here's my trend line. Now I'm going to put the alert, 46.55. And what I'll look to see is, you know, potential dip buy at 46.55 or short. The breakdown. You always want to make sure though, because 46.50 is next, is that whole number. You always want to keep that in mind, the whole numbers. And I got the 49 now. The only other area that I would be mindful of is that 51.50. So the high, yeah, 51.50. Sometimes it's hard to like get the number mapped. All right, there you go. Or 50.50. Sorry. So we'll create an alert to say buy breakout if holds 50.50. Oops. Or short rejection. All right, so those are the key levels that I would be looking at for big. All right, so you know, I like to focus more on the low floaters, low float penny stocks, low market caps, because they move really fast and you can make a lot of money really quick. But I'll trade anything, you know, it doesn't matter. When the opportunity presents itself, you make the trade. You got to understand that some of these guys, these gurus that talk about these, they need like a niche. They need to sell you on a strategy, right? So they'll say, you know, I only trade this because, you know, that's my niche, you know, but they're probably trading these big price stocks too. They're just not telling you that. If they even trade at all, most of these guys are not trading. I'm telling you guys, I know you guys watch these guys on Twitter and you guys think they because they post a P&L that they're trading. They're not trading, guys. They're using, you know, they're paper trading, and they're not trading. Even some of these gurus in their disclaimers talk about sometimes they'll make trades using paper trading accounts, like and you're not even aware of it because you're not reading the disclaimer and the fine details. Most of these guys, or all of them, are rich because they make money off subs. So you know, when they talk about you know, having financial freedom, living how you want to live, traveling and day trading, they're all lying to you in the premise because they're making money off their subs. They have a business that they run. They're not literally living off day trading. And all the moderators that are part of those groups are all getting paychecks from the guru. So they're all making a living now. They're getting a salary. So you gotta put that into context, guys. You know, you know, these guys, they all are just really trying to get rich. If they were all like super profitable traders, they really wouldn't be, you know, focused on growing these. Everybody just wants to be Tim Sykes. Tim Sykes, if you put it into context, makes probably more, maybe $20 million a year, maybe more, off his subscribers. I mean, that's why he's traveling and renting Instagram hoes and traveling with them all over the world. You gotta pay them hoes to hang out with him, you know. They ain't free. You know, hoes are for rent. They're not for sale, bro. You know, and how you think he's doing that? You think because he's trading? It's not because he's trading. He's probably not even trading at all. That Profitly shit, that shit could all be rigged and manipulated. And you only post what you want to post. So, you know, just keep that in mind, guys. You know, these guys, even Tim Gertani, he's getting a check from them. He's getting a check from investors underground. You know, Steven Ducks is probably getting a check from him too if he's posting. You know, so you know, just keep all that in mind, guys. Don't get hyped up. You know, I'm not saying you. You know, if you feel like you're gonna gain something by joining a chat room, you know, that's okay. But make sure you're gaining something. And honestly, if you want real proof that they're trading, tell them to send you their brokerage statement. If they don't send you the brokerage statement, it's because I guarantee you they're not trading. And I guarantee you that if you ask anyone to do it, they're not gonna do it. They're not gonna do it. They're not gonna do it because they're more than likely not trading. They're using paper trading accounts and they're making their money off their subs. You know, and it's misleading. You know, so just keep all that in mind. I taught myself how to trade. You know, I watched a lot of DVDs. You buy them on eBay. Don't fucking spend full amount of money on these. And you know, sometimes you get some tips. I learned from Sykes. I learned from Cameron Ross, who's a fucking, he is like a crook. I don't know how he's not like in jail. Like, he's a pumper, 1000%. Deck Mark Trades, I'm sorry guys, he's a pumper too. I know you guys love him. And not to say that he doesn't provide good information, but he definitely be pumping some stocks too. You know, most of these guys do it. So, you know, just be careful. Remember, when the guys talk about small account challenges, why they're talking about small account challenges, if they're really day traders who make their living off day trading, they need those big accounts to make their money. They're doing small because they're making their money off their subs. That's why, guys. You guys gotta, you know, think. All right, so just keep that in mind. All right, folks. So enjoy your weekend, study. Remember, it's about support and resistance. Look for an edge. And you can make money making trading stocks, guys. It's hard, but it doesn't have to be if you keep it simple. Focus on support and resistance, looking for stocks that are gapping up huge for potential volatility. If a stock is up several days, you may look to short it. You can even swing a short. Just all those things to think about, right? I know I spoke way too much today. So have a great weekend, and like, subscribe, and share.